Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news. The Chinese economy might be at risk of unravelling, or at least in need of some emergency stimulus far above what has happened so far. The extent of their stall has been revealed in their new yuan loans data. Chinese banks extended just 645 billion yuan of new loans in April, the lowest since December 2017, and well below market expectations of 1.5 trillion. In March, this level was 3.1 trillion, so the 80% dive in just 30 days has been very dramatic. Their lockdowns to contain the pandemic spread are having a stifling impact on their economy. And warnings are growing that more aggressive measures will be required to save the economy. Many families and small businesses are losing the ability to resist economic shocks. And China's slowdown is reversing almost all mineral commodity prices, perhaps none as fast as for tin or copper. In an attempt to tempt more people back to their moribund property markets, over the weekend their central bank surprised with an order that first home buyers be given a 20 basis point discount on their mortgage interest rate. Perhaps there is some light at the end of the tunnel in China. Shanghai might be over the worst of their lockdown pressures. At least that is what global investors are betting on. But whether that will actually be enough to regain momentum is very uncertain. In the US, at the end of last week, the Fed boss has signalled that they will raise their policy rate by 50 basis points over the next two meetings, despite some pain, as they find new resolve to battle inflation. And he has plenty of support amongst voting members. Meanwhile, American consumers have similar concerns about inflation. The latest sentiment survey, this one from the widely watched University of Michigan, fell to its lowest level since August 2011 and below market forecasts. At the G7, countries have been huddling in Germany and warned that the war in Ukraine is stoking a global food and energy crisis that threatens poor countries. And urgent measures are needed to unblock stores of grain that Russia is preventing from leaving Ukraine. And India has banned wheat exports as more countries prioritise fear over cooperation. India isn't a significant wheat exporter on a global scale, but some poor countries do rely on it. And the US Treasury 10-year yield will start the week little changed at 2.93%. And the price of gold starts today up $2 since this time on Saturday at $1,812 an ounce. A week ago it was $1,881 an ounce, so it's declined more than 3.8% over that time. And oil prices are still just under $109 a barrel in the US, while the international Brent price is just over $110 a barrel. Momentum to bring in new oil rigs into production in North America seems to be rising. And the Kiwi dollar will open today firmer against the US dollar at 62.9 US cents. Against the Australian dollar, also firmer at 90.7 Australian cents. And against the euro, we're up to 60.4 euro cents. That all means our trade-weighted index starts today at 70.6, which is marginally firmer in a week. We welcome your feedback. Leave a comment below or on our website. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.